Good morning/afternoon, ladies and gentlemen. It is my great pleasure to welcome you to today's session on a subject that has shaped economies, built empires, and secured families' wealth for generations: the benefits of gold investment. Before we dive deep, let me ask you a simple question. If you were given $100 in cash in the year 1970, and another $100 worth of gold in the same year, which one would be worth more today? That $100 bill would still be just $100. Maybe it buys less bread and rice today than it did back then because of inflation. But the gold? That same $100 worth of gold would be worth over $6,000 today. That's the power of gold. It is not just a metal, it is a store of value, a hedge against uncertainty, and one of the oldest forms of wealth protection known to mankind. Over the next 2 hours, we're going to journey together to understand why gold remains such a powerful asset, how it fits into both global and personal financial strategies, and why, especially in times like these, you should consider gold as part of your investment portfolio. Let's start by understanding what makes gold so unique. Gold has been cherished for thousands of years. From the Egyptian pharaohs who were buried with golden treasures, to the Mali Empire under Mansa Musa, whose wealth was largely measured in gold, this metal has always represented power, beauty, and security. Unlike paper money, gold cannot be printed at will. It is rare, difficult to mine, and universally accepted. A bar of gold in Freetown is just as valuable as a bar of gold in London, New York, or Dubai. That universality is one of its greatest strengths. Think about it this way: every time there has been war, economic collapse, or political instability, people have turned to gold. During the global financial crisis of 2008, gold prices surged because people didn't trust the banks. In 2020, when COVID-19 shook the world, gold again became the safe haven. So, why do people trust gold? Because it's tangible, durable, and cannot be destroyed by inflation or government mismanagement. Financial benefits of gold: 1. Hedge against inflation. When inflation rises, the value of money falls. We all see it when prices go up in the market. But gold usually rises in value during those times, protecting investors. That's why it's called a hedge against inflation. 2. Portfolio diversification. Smart investors never put all their eggs in one basket. If you hold only cash or only stocks, you are at risk. Gold balances your portfolio. Historically, gold has moved differently from stocks and currencies. So when stock markets crash, gold often rises. 3. Wealth preservation. Generations have passed down gold because it retains value across decades. Families in India, the Middle East, and even here in Africa save gold jewelry not just for beauty, but as a family savings account. 4. Liquidity. Gold is highly liquid. If you need money urgently, selling gold is easier than selling land or property. You can walk into almost any financial market and find a buyer. 5. Universal value. Unlike currencies that fluctuate, gold has global recognition. A gram of gold in Sierra Leone has the same value as in Ghana, Nigeria, or the USA. Practical aspects. Now, how can you actually invest in gold? Let's break it down. Physical gold: jewelry, coins, bars. Gold ETFs and mutual funds. Paper gold: no need to hold the metal. Gold mining stocks: investing in companies that mine gold. Digital gold: modern platforms that allow fractional ownership. In Sierra Leone, many people invest in gold informally, buying jewelry or trading small amounts. But globally, investors also use ETFs and futures. The key is to match your investment style with your risk appetite. Global and local perspectives. On the global stage, central banks are buying more gold. Countries like China, Russia, and India are increasing their reserves. Why? Because gold strengthens financial stability. Here in Africa, gold has always been part of our story. From Ghana, once called the Gold Coast, to Sierra Leone, gold has shaped trade and wealth. But beyond mining, we should see gold as a personal financial tool, not just a national export. The future of gold investment: the future looks bright. Experts predict steady demand due to growing wealth in Asia and Africa, uncertainty in global markets, digital gold making access easier, gold's potential role in green technologies. So while cryptocurrencies rise and fall, gold remains stable. To wrap up, gold is timeless. It protects you against inflation. It diversifies your portfolio. It preserves wealth for generations. If you are serious about financial security, gold deserves a place in your investment strategy. So my challenge to you is this: after today, take a step. Whether it's a gram of gold jewelry, a small bar, or digital gold, begin your journey. Thank you for staying with me. Remember, gold is not just an investment, it is financial insurance. And like insurance, the best time to buy was yesterday. The second best time is today.